the first 6 months of the year, the Nigerian government spent 1.57 trillion naira servicing its debt obligations. Victor Aluyi, the head of portfolio management at Comercio Partners, now joins me from Lagos for this conversation. Victor, glad to have you join us on Power Lunch West Africa. Now, my next words are directly for you.
Thank you for having me.
Medium-term fiscal challenges, especially with respect to revenues, which could snowball into a debt sustainability crisis. Now, those were the words in which the federal government painted the country's debt situation. All of this, of course, they say, if not immediately addressed, that's when Nigeria will have a debt sustainability crisis. But I'd like to know, how do you see Nigeria's debt problems?
Well, I mean, if you look at Nigeria's debt problems, on the surface of it, it looks decent. As a matter of fact, our debt to GDP is just slightly north of 20%. If you compare that to other, sub-Saharan African peers, we look quite decent. Ghana has a debt to GDP of about 64%. Angola has it over 100%. South Africa has about 62%. Same for Kenya as well. So for Nigeria, as debt to GDP that is just, slightly north of 20%, it makes us look, decent. Actually makes you feel like we even have some, headroom to probably even take on some more debt. However, I think the challenge is not necessarily around the debt, but it's really around the sustainability of it. And it directly speaks to the revenue challenge that we have had. The key thing to then look at here is our debt service to revenue. Like you mentioned, for the first half of the year, we spent about 1.5 trillion basically just servicing our debts. If you look at revenue so far, it's been significantly weaker than what we had last year. For Q1 alone, revenue was about 950 billion. And if you look at the debt service to revenue ratio, that was over 90%. So I think the issue has essentially been around the very narrow revenue base and the fact that that has even been further exacerbated by the whole COVID-19 challenge. If you look at revenue through last year, we had essentially over 1 trillion per quarter, which gave us close to 5 trillion for the whole of 2019. But looking at the figure that we have for Q1, if you extrapolate that and look at Q2, you'll be looking at, just slightly below 2 trillion. So clearly, we have a revenue challenge, and that sits at the top of the debt sustainability conversation.
Now, Victor, if we streamline your response into 3 keywords: decent debt for Nigeria, especially like you said, when you compare with our peers, and then sustainability being a key issue, and then you also highlighted revenue challenges. It kind of simplifies the problem for Nigeria. We should be looking to earn more revenue. But I'd like to get your thoughts on what can Nigeria be selling now that investors are looking to buy?
Well, I think, the need to get in more revenue has also been at the forefront of, government efforts to essentially diversify, the base of the economy. And by doing that, you would also diversify, the revenue base or the revenue stream of the economy. This monoproduct dependence is clearly not sustainable. So clearly, the country needs to earn significantly more from other sources. And that's why there's been talk about, widening the tax net, that you've seen all kinds of aggressive measures actually to increase revenue on other fronts. So I think in line with the, the economic sustainability plan, government is essentially trying to increase its capacity to generate revenue in a sustainable way, not revenues that would spike over the course of a quarter or two and then recede after that, but in a way that is, sustainable, such that the economy also grows, sustainably, and then we can have, a sustainable debt profile, if you will. So I think these are some of the efforts that government is, making to try and, grow that revenue base by just diversifying the base of the economy, really.
Now, talking about diversifying the revenue base, a latest report on Nigeria by Chatham House actually tries to propagate the idea that Nigeria should begin to look forward to getting new meanings to its diversification agenda, and kind of just touched on looking at issuing more green bonds based off the success of the first one it issued for Africa. I'd like to just get your assessment of what you reckon investors' appetites might be for green bonds at this time in Nigeria.
I think investor appetite for Nigerian debts in generally now, not even necessarily green bonds, is hampered by a number of factors. Really, number one, um, the yields are not as attractive as they used to be. So right now, at the long end, you're having yields that are below 10%. For local investors, you have a negative real return. For the foreign investors, you have a significant liquidity issue with foreign exchange. So even if the yields become quite attractive, it's also important from a foreign investor perspective that there is, ample liquidity in the FX market that ensures that they are able to come in and, leave with their investments, whenever they want to. So I think the FX challenge also weighs significantly on investor appetites for Nigerian paper, not just green bonds now, but all kinds of Nigerian debt. Really, the interest rate trajectory has not been encouraging, as well as the FX situation has essentially continued to weigh on investor sentiments at this time.